Just in, the global energy markets just experienced a massive shockwave. But this time, the momentum is violently shifting in the opposite direction. Crude oil has suddenly dropped by 3% today. It is currently hovering right around $108 a barrel. Why? Because commercial ships are moving through the Strait of Hormuz again. But is this terrifying blockade actually over? Stay with me. The implications are huge. Reports are flashing across the trading terminals right now. According to Reuters, several major oil tankers just transited the strait. Satellite tracking data confirms that commercial vessels are indeed moving. They are passing directly through the world's most dangerous choke point. Iranian state media claims they are simply allowing normal transit. They claim the waterway is completely secure for all friendly nations, but the United States vehemently denies this narrative. According to CENTCOM, the threat level remains absolutely critical. U.S. Navy officials state they are actively escorting these commercial vessels. They are navigating through highly contested and heavily armed waters. Now, here's the key point. Wall Street is desperately trying to price in this breaking news. Algorithmic trading bots immediately sold off crude oil futures. They saw ships moving on the satellite data, and they triggered massive sell orders. Brent crude violently pulled back to $108. That is a sudden 3% drop in a matter of hours. Mainstream financial media is already celebrating a massive victory. They are telling the public that the worst of the crisis is finally over. But something important happens here. If you look under the surface, the danger is actually growing. According to Bloomberg analysts, this sudden price drop is a massive illusion. The underlying risk of a total regional blockade has not disappeared. In fact, maritime insurance premiums are still sitting at absolute record highs. Insurers are charging a fortune just to enter the Persian Gulf right now. And many global shipping conglomerates are still refusing to send their fleets. They simply will not risk a $100 million vessel, not while ballistic missiles are actively flying across the Middle East. What if this temporary reopening is just a strategic military pause? What if Iran is simply repositioning its advanced naval assets? And this is where things change. Let us talk about what this actually means for the American consumer. Because gasoline prices at the pump have not dropped at all. They are still painfully high across the entire United States. A temporary dip to $108 does absolutely nothing. It does not fix the massive structural damage to the global supply chain. According to macroeconomists, the inflation narrative is already fully baked in. The Federal Reserve is watching this oil volatility with absolute horror. They need crude oil to fall back to $70 to kill inflation. At $108, consumer inflation remains incredibly sticky. Could this be the moment the Fed completely loses control? If oil suddenly reverses and violently spikes back toward 130, the central bank will be totally trapped in a stagflation nightmare. They cannot cut interest rates while energy costs are rapidly exploding. But keeping interest rates high is actively destroying the commercial real estate market. It is putting massive financial pressure on regional banks across the country. Wall Street is terrified of this exact macroeconomic scenario because a banking crisis combined with a massive energy shock, that is a catastrophic recipe for a severe global recession. Now, let us look closer at the Persian Gulf dynamics. Saudi Arabia and the United Arab Emirates are watching this closely. According to regional reports, their military forces are operating on high alert. They are heavily dependent on the Strait of Hormuz remaining completely open. If the blockade fully returns, their oil revenues drop to absolute zero. Their sovereign economies would essentially freeze overnight. This is exactly why diplomatic backchannels are working overtime right now. According to Al Jazeera, intense negotiations are happening behind closed doors, but the fundamental trust between these nations is completely broken. But something important happens here. Let us look at how the safe haven assets are reacting today. Physical gold barely moved on the news of the ships transiting. According to Kitco data, gold is fiercely holding its massive recent gains. It is stubbornly refusing to sell off. Smart money simply does not believe the geopolitical crisis is over. They are keeping their capital locked safely in precious metals. They are using gold as the ultimate insurance policy. And what about the cryptocurrency markets? According to CoinDesk, Bitcoin is showing incredible relative strength today. While oil dropped 3%, Bitcoin actually absorbed the market volatility. Many analysts suggest Bitcoin is now trading like a true macro asset. It is completely ignoring the short-term noise of commercial ship movements. Investors are actively using it as a hedge against fiat currency debasement, because no matter what happens in the Strait of Hormuz, the U.S. government will eventually have to print trillions of new dollars. They will have to print money to fund these ongoing foreign conflicts. What if this current transit is just the calm before the ultimate storm? IRGC commanders have not retracted their previous aggressive threats. They still claim the ability to shut the strait at any given moment. And the U.S. military still maintains a massive strike force in the region. The entire Middle East is essentially a giant powder keg right now. Just one tactical miscalculation could send oil soaring past 150. Just one rogue drone striking a fully loaded commercial tanker. And the global supply chain instantly collapses. The economic fallout would be felt in every single country on Earth. You must stay incredibly vigilant in this volatile market environment. Do not let a minor 3% drop in oil fool you. The fundamental geopolitical risks are significantly higher today than they were yesterday. Major banking institutions are still quietly accumulating hard assets. They are aggressively hedging against the total failure of fiat currencies because the dollar endgame is accelerating rapidly before our eyes. We will continue to track every single development in the Persian Gulf. Watch the global shipping data very closely this week. Keep a close eye on the core inflation numbers coming out next, because the real market volatility is just getting started.